Joining us, Scott Acheychek is the CEO at Rex Shares, home to levered stock-specific funds and also options-driven covered call funds. So a bunch of different ways here, and I feel like those two kind of are at odds. Scott, you got something from both ends of the spectrum of speculation there.
That's right. Yeah, we cater to both traders and investors alike.
So are you seeing flows into any particular of the levered funds into this report? Anybody really juicing up any of the names?
Yeah, so we have seen pretty much consistently since we launched our first 2x leveraged single stock, which was on Tesla and NVIDIA, almost every single dip we see buying. We see creation of new shares, we see assets coming in, and that hasn't stopped since we launched a Microsoft or a Google version as well.
How do you kind of figure out which ones you want to do this with? Because I know you've built out the suite over time. You've got Tesla in there, you've got NVIDIA, Alphabet, Microsoft. We'll flash some of the tickers for them. What's coming next? Who gets to join that elite crew?
Yeah, I mean, we kind of take our time, right? We're looking for specifically stocks that are super popular, that people want to talk about, that people trade, that people follow. And, quite honestly, big tech right now is super popular, and that's why our focus is right there right now.
Because you've got more longs than shorts, right? Tesla and NVIDIA are the only ones you've got the short. All right, because Alphabet, Microsoft, I guess then implication you don't think there's the demand necessarily for people to go short those right now. Or am I reading between the lines too much?
Yeah, no, you're reading a little bit between the lines too much. I mean, I think the reality is there's a lot more interest in the long products. I think there's just more of a bullish sentiment right now. So even when we have some downturns, we see some inflows into those short products that you mentioned, but nothing really significant yet.
Okay, fair enough. Where do people spend their time? Do they get in? Do they get out? How do you monitor the trading in here? Does it look like people just want to stick in these levered funds, or do they mostly trade them?
Yeah, no, and the levered funds, they trade significantly, like millions of shares a day we trade, and then obviously there's a bias whether it's, bullish or bearish, and that's when we see assets either come in or come out of the funds. Okay.
Right now, the covered call strategy, tell me about that, FEPI. I've heard this fund across my feed a few times, where it's an interesting way where you can still have all this exposure, but then get a little yield, get a little safety to go with it.
Yeah, so this is actually a pretty unique product that we're proud of. So we are long the 15 stocks that comprise the FANG and Innovation Index. And what we're doing, we're selling calls on the individual names, not the index. So what's cool about that is on the index side, you get hit with cross correlation. One stock goes up, one stock goes down, and volatility stays flattened. But we're focused on the individual stocks. So we're able to sell those calls slightly out of the money to allow for NAV appreciation. But also because it's on the individual stocks and it is more volatile, we're also getting an attractive yield. So we've had 3 distributions so far. Each one is annualized over 25%, which is probably on average about 2 times what the traditional covered call strategy faces.
Okay. And thinking about the call side of this, remind me, I know we've had this discussion, but just to get into the details again, you're selling the calls on the index level or on each stock-specific exposure?
For FEPI, the beauty is that we're selling the calls on the individual stocks. So we're taking advantage of, whether it's the Teslas or NVIDIAs, we're taking advantage of those elevated vols versus the lower volatility that it would be if it was on the index.
Okay. Right now is the idea that volatility has enough in it to get some money. What happens if VIX really starts moving? Does that make the fund even more appealing?
Yeah, so right now, since we launched in October, like I said, our annualized distribution is about 25%, and that's with a VIX averaging, give or take, 14 to 15%. So if the market really starts moving and volatility skyrockets, the calls that we sell will be worth a lot more. So we could see our yield grow significantly in the case of some kind of downturn or some kind of volatile impact.
Okay. Any thoughts, any horses in the race for this afternoon? Apple, Amazon, Meta. Any stock thoughts for me, Scott?
Yeah, I mean, I think with big tech right now, they've been priced to, a lot to perfection going into each earnings, and investors are picking apart 1 or 2 things that may be small, may be large, but there have been a lot of selling the news, which I think will probably continue when we start digging into, let's say, the Apple news.
All right. Appreciate the catch up. Thanks for your time, Scott.
Thanks, Oliver. Take care.
All right, you got it. All right, the levered long funds, 2 short options, but not for any of the names tonight. The T-Rex shares as well as FEPI, the Innovation Equity Premium Fund. Scott Acheychek, Rex Shares.